Hi guys, Max here, and this is of course your daily market update for yesterday, the 25th of July. And as you can see, it was actually relatively mixed for the day. Some industries did okay, energy was up, and old world industries did a little bit better on average, but tech really didn't perform too well for the simple reason that we're expecting quite a heavy interest rate hike this week. And tech companies tend to be more impacted by that kind of thing. We've also seen the continued strengthening of the dollar, and companies like Google and Apple tend to have massive overseas revenues. And so as the dollar strengthens, actually the revenues that come from these foreign countries like the rest of Europe and the rest of the world, well, that diminishes their income. On the whole then, the S&P was up by about 0.1%, the Nasdaq was down by about 0.5%, and the Dow Jones was up by 0.3%. As for the rest of the world, it was actually really rather more positive. Americas was quite strong, Europe was quite strong, and China as well. The FTSE 100 was up by about 0.3%, the Stoxx 600 up by 0.1%, and on the whole, the MSCI World Index was about where it started for the day. In currencies, we saw most of the same figures you'll be used to hearing at this point. The euro at $1.02, the pound rose a little bit and is now at $1.21. And the yen fell slightly down to 137 per dollar, but no real major changes there. In the world of fixed income assets and the bond market, it was very similar once more, with the US 10-year Treasury yield rising by about 6 basis points to 2.81%. The German 10-year yield fell by 1 basis point, and the British didn't change at all, so no major volatility for the bond market. In commodities though, there was quite a major shift in a bunch of different areas. WTI crude oil rose by 2% to $97 a barrel. Brent crude is currently sitting at about $100. Natural gas prices in Europe yesterday alone rose by 18%. From about 160-ish euros per megawatt hour to 196. Again, that's overnight. Gold prices then fell very slightly and are sitting at about $1,735 an ounce. In the world of the crypto, we saw asset prices fall for the most part. Bitcoin down by about 4%, just sitting above $21,000. Ethereum down by far more, but that's following a stronger last week performance for Ethereum, so it's sitting at $1,400. Most altcoins were down in that sort of region, around about 5% average for the day. And the reason for this is that they're risk on correlated assets, and they're also reacting to the idea and the fact that we're likely to see another Federal Reserve rate hike this week. Now, we have got some individual bits of news which are of note today. The first coming from Coinbase with the idea that they might actually be targeted by the SEC. Now, of course, last week we had that massive insider trading scandal that I put out a full video on it to explain everything. I'll link that down below in the comments or the description for everyone who missed it. But basically, an employee traded cryptocurrency on the idea that these new cryptos would be listed on Coinbase and would thus rise in price. Now, he used this inside knowledge to make $1.5 million. He got caught, he got sent to jail, and he's now been charged with securities fraud. Now, Coinbase have contested this idea and said that he can't be charged with securities fraud because crypto isn't considered a security. The SEC, though, doesn't really seem to care and is just kind of saying that it is securities fraud anyway. And now they're going on to investigate Coinbase as well for trading securities without the proper regulatory processes that would usually be required. Now, this could be very bad news. Coinbase could get absolutely hammered here, and this could change how cryptocurrencies are regulated for years to come into the future. But it could also be very good news, as the SEC is, as of yet, just deciding to look into this into the future. And so they could come out and say, actually, we agree with the general consensus right now that cryptocurrencies are not securities and they're not going to be regulated as such. As of right now, we really don't know what direction this story is going to go in. Now, of course, as I just mentioned earlier, gas prices in Europe are up 18% yesterday alone. They're now up about 500% year over year. So there's a whole load of chaos and things are not looking very good this week. Russia just cut their natural gas supply via Nord Stream 1 to Europe by about 50% again yesterday, and panic ensued. We did put a full video out on this yesterday as well, and I'll link that down below in the description for you too. And basically what we're seeing now is the EU trying to get a new law published and pushed into effect that would encourage countries to reduce their gas consumption by 15% or more. Now, it does now seem to have mostly worked. It was agreed after yesterday's development, and as of right now, the law is just a target. It's the countries proposing that they will all try to reduce their gas consumption, but there is no mandatory clause yet. However, if the EU declares an emergency, it would then become law and become mandatory. Another way for it to become mandatory would be if 3 separate EU countries all go and ask for it to be mandatory. That's down from what used to be 5 for the previous proposal. Really, it's looking very likely that this will go into effect as law and it won't be an optional thing within a few weeks. Now, in some corporate news, we got some worrying developments from Walmart. We got a little bit of a panic because this company is supposed to be a bit of a consumer defensive that's supposed to do well in recessions because they provide cheap services and cheap products to people, but inflation sort of changes all of that. They're also seen as a bellwether for other similar companies like Target, Costco, and so it's a very important company to look at the moment. Now, what is actually happening? Well, 2 things that they just announced yesterday. Firstly, they are slashing prices on a whole load of stock to try and get rid of it because they have too much inventory. As a result of this, they've also cut massively their annual profit expectations, and this is after already cutting their annual profit expectations earlier in the year. They've just cut it by another 13%, which is not a small amount at all. Now, surprisingly enough, despite the fact that this is bad for Walmart as an individual company, this is good for inflation. This is the kind of thing that Cathie Wood told us would happen a year ago at this point. This is how recessions impact inflation. You see lesser consumer demand, you see inventories rise, and so you see prices fall to get rid of that extra stock. This is without a doubt bad for corporate earnings, and so it should really be bad for asset prices too. But of course, if this does result in inflation falling in the future, then this might be good for asset prices in a roundabout way. As of right now, though, on this specific news, Walmart is trading at down 10% from yesterday after hours, which is of course not nice for any Walmart stockholders. Finally, the last thing to talk about today is the fact that the White House has come out with some massive misinformation and basically propaganda to try and change the narrative surrounding the recession that the United States is entering. Now, I'm only going to touch a little bit on this here today because this requires a full video that I will show you in its entirety later. But basically what we see here is a statement, you can read it behind me. What is a recession? While some people maintain that 2 consecutive quarters of falling real GDP constitutes a recession, that is neither the official definition nor the way economists evaluate the state of the business cycle. And then later on they say it is unlikely that the decline in GDP in the first quarter of this year, even if followed by another GDP in the second quarter, indicates a recession. This is, of course, absolute nonsense. They're literally saying, even if the data shows that there's a recession, listen to us instead, there's no recession. There is. This is doublespeak, this is insanity, it's propaganda, I don't really know what else to call it, and that things are only going to get worse for the rest of this week because we've got loads of news coming out, and so it's going to be very volatile. This also seems like a little bit of a preemptive move by the White House to try and get out ahead of the next GDP figure, which is coming out today, not today, sorry, but later this week on Thursday, and we're sort of expecting it to be another consecutive quarter of negative growth, meaning that the US will literally be in recession, despite what the White House will tell you. As for the rest of the week, we have earnings from some incredibly important companies. Google, Apple, Amazon, Microsoft, and Facebook, basically the 5 biggest, most important, most valuable tech companies in the world. They're all going to be putting out earnings, and so everyone's going to be watching that. We also have the Federal Reserve's rate hike decision, which is obviously very important too. We have the US's GDP data coming out on Thursday, as I said. We have inflation data coming out from Australia and Europe, and some minor inflation data from the US too. Finally then, we have US housing market data, home sales, and then finally, once more, consumer sentiment data. So this is absolutely going to be a make or break month. It's not going to be easy at all. It's going to be boom or bust, depending on if this data is positive or not. If you enjoyed this video, then make sure to like, comment, and subscribe to bless the YouTube algorithm. It really does help. If you want to join our exclusive community, then check out our Patreon. You get access to our Discord server and extra content like access to my portfolio and buy and sell alerts for all my own investments. Also, make sure to check out the link in the description to Masterworks. It can help you protect your portfolio against market turmoil through fractional shares of art from world-famous artists. Art has historically proven to be uncorrelated to the markets, so it's a really valuable resource with the markets falling every week. There's also a link in the description to I Trust Capital, which helps you to invest in crypto through your tax-advantaged IRA, which could literally save you thousands. If you, like me, think crypto going down is a buy-in opportunity, then now is the perfect time to join I Trust Capital. Thank you all for watching. Stay stoic. Until next time.